Good afternoon. Welcome to Options Tender. It is Saturday, 1/7/23. Welcome, everybody. Thanks for joining us here at Options Tender. If you're new, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. Don't forget to like the videos. It helps us get these algorithms moving and shaking so we can get a video out to many more traders out there. So let's get into it. We're going to go through ES on multiple time frames, then we're going to check out just some observations on SPY QQQ and IWM, and also DIA. And then maybe we'll check out something else there. But let's just get going, see how much time we have left, and we'll go from there. Okay, so we have ES on the monthly time frame. We talk about this over and over again on the weekday and weekend updates. By the way, if you want to get all these videos, hit that notification button so it reminds you when these come out. I put them out virtually lately almost every day. So we have this consolidation area up here on the monthly. Took 3 months to get through. Broke the consolidation, back tested, broke down, back tested. You know, we actually at one time thought that we might break above it, but couldn't hold, so broke down again. You see, this is a troubled area. If we cannot get back into this spot, this consolidation zone, then it's more trouble for the bulls. So what we're looking at is we back tested one more time, and I just think this is just a dead cat bounce, and we should continue lower at this point. We've already back tested enough times. If we start heading towards this way, I think the bullish scenario is more likely in that case, where we have some sort of inverted head and shoulder, left shoulder, head, right shoulder, and we should get new highs from here. I don't believe that's a situation. We are in a bear market. The MACD is headed lower. We are near that 0 point, so it could be considered neutral, as well as the RSI. But we're underneath the 8 EMA. It's our trending indicator to the downside. As soon as we start holding above the 8 EMA and regaining the sideways 20, you see it started to curve down a little bit, but the 20 simple moving average on the monthly, then we'll have a little bit of hope. But in the long term here, we're still looking down. Let's go down to the weekly. Change our time frame. Weekly time frame, ascending triangle. Typically when you have some sort of ascending triangle like this, the measured move is to test the bottom. That's what we've been saying over and over. That's 2200. That's a long way away, and I understand that. But let's go 1 month, 1 week, 1 day at a time. And just notice after we broke down, we have lower highs, lower lows, and then we've been oscillating virtually sideways in such a big pattern around this 3900 area. So this is such an important spot. We barely closed above it. That's something that we're going to talk about. We're looking at this 2-week range. It looks like we're breaking out, and that's I'm going to name this video Breakout. You know, question mark, is this really a breakout? I would say we need a little bit more evidence. So it's looking good so far for a little bit higher prices, but I'm just not sure we're even going to get much further. I think this might have been the holiday trade just talking to us there. This sort of pattern is just a wave 2. It's just a minor wave 2 or minuet, depending on what you know, on what level you're talking. But just like this, we have a 1, 2, and that's very similar, except this was in price. We actually went up in price rather than time. We spent 3 weeks here in time. So, okay, that's pretty much it on the weekly. I'm not going to go through everything else. Was there something? There was. We'll do it. We'll check out the weekly time frame. Yeah, we are consolidating. We're getting really close to the apex of this triangle, if you see, with this turquoise, and they both coincide with moving averages. These are weekly, 50-week and a 20-week, and so you see how we're triangulating. We have this bow and arrow, kind of the midpoint. But let's see what we have on the SPX. I believe I marked down on the MACD, kind of what we were. Let's go to the weekly. Yes. So, you know, we're channeling down, if you notice on the SPX, but notice the divergence we had going here. Well, to me, it just looks like it's kind of bear flagging. We're up at the top of that range. So this says to me it's very possible we can reach back lower, make lower lows, and even it could be another divergent low to where we're making a higher low again, or we break down from this point and go lower, which is more the scenario that I'm looking at, going much lower here, breaking down from this channel and heading down. Okay, not all in a straight line. All right, I believe QQQ, we have the same sort of thing happening. Let me see if I mark this down here. On the weekly, I did not. It's on NQ. Let me just go to NQ. I already had it set up there. So NQ on the weekly, which is just the futures for the NASDAQ. We'll go to the weekly board. Yes, so similar aspect. We see it's weaker, so we're not getting much of higher highs, higher lows. We're just consolidating as a triangle. But notice it just looks like a pennant. It looks like a triangle pennant, which is the same effect as a bear flag. So just two notable things on the weekly. So since we're on that time frame, and then we'll just go back to the ES, and now we'll go down to the daily. Just want to point those things out. Trend is our friend, and this just gives a much better view, detailed view of some of the supports and resistances there. And what's happening is higher lows, higher high, or excuse me, lower highs, lower lows. But getting out of that channel, once we broke down from the channel, we got underneath that, consolidated underneath that 8 EMA, which is kind of going sideways. We got back over the 20, which is good. We're right into resistance. We're smack dab on that resistance line that I've had here for God knows how long, months and months and months. But so we're right there. You know, the bulls still have some work to do. We get above that area. We'll call it 39.20, and you know, and then you can kind of use that on the let me go. I forgot to go down to the daily time frame. Sorry about that. There's a little bit better view. Okay, and we stopped right at that 50-day moving average. But yeah, we're just over that 20 and the 8 EMA. Got above that, and you see all of the moving averages are coming together, which once that happens, usually we have an explosion of price afterwards, but to the upside or downside. And what we're looking at right here is we're just not out of the woods. I don't call this a breakout. That's the whole point of this video. I don't think we broke out. We kind of got out of that consolidation area, the first portion of it, the mid section of this box. If we box this in, the mid section would be where we had the most trouble, and we couldn't close above it. Well, we closed above it, which is a little bit better. But if you notice, we just have a box going here. And we're still inside that box. We're right at resistance. We're testing the 50-day moving average. We can't get over this breakdown candle yet, not as of that week. And the holiday trade is over. So I'm a little bit leery that this is going to move up much at all, if not break down from this resistance as soon as Monday going into Tuesday. Okay. Just wanted to make that clear. And if we go to the 65-minute chart, we're going to see more of the same, just in a little bit more detail. And that's when, you know, drawing these lines out, it's not perfect. It just kind of gives us a, you know, just an effort of what's happening. So we're just guidelining what we're thinking in our mind, so we can see it on the charts. And right now I just see a bear flag. That's it. You connect some dots there and I see bear flag. So we have our weekly range set in the purple. If we get above this channel, then I think it's much easier to say, hey, go long to the next step, which is somewhere around the 90 to 4,000, the 39.94,000 area up here, which the options expected move is actually right there at 40.15, translated from the SPX. And so that's when I would kind of scalp to the upside. We still have long positions, but we're still leaning a little bit more to the put side. So we're still bearish. We're in a channel. And I plan on looking at futures on Sunday night going into Monday morning just to make sure. We'll probably put on a couple contracts to the downside. And if we break above this channel, we'll take those contracts off. Simple as that. It's a simple trade. And we'll see where we go in now that we have some volume, some life back into the market. Now, we did a break above our triangle, so that's a good sign for the bulls. We're headed to the upside. We had a fake break to the downside, which we saw on, I believe, Thursday's video, that we had a break of the triangles on the indicators, and then of course you saw what happened after that on Friday. And I just want to give, now that that's our regular kind of points of view there that we usually do, our market update, but I want to show you just a couple of things on SPY. QQQ, IWM, and DIA, and I'll wrap it up. I think we're at 11 minutes. I just don't want them to go over, the videos to go over 20 minutes. It's a little long. But we're on the Elliott wave chart, so I'll leave it there for a second. I'll just kind of show you what I'm looking at up close. I put these on our Patreon. And I'll keep these going often for our patrons, but I'll just every once in a while I'll show you guys what's happening on here. But we have a 5-wave count down for wave 1. And if you saw last week's videos, I had a lot of different scenarios happening. Well, all those are negated. Now we have either a bearish, from what point is the question, a bearish move to the downside, or this is a bullish scenario where we actually start heading much higher. But we're sticking with the bearish right now. We have a 5-wave move down for wave 1. We have a 3-wave move for A, 3-wave move for B, and then a 5-wave impulse for C. That is the first wave A on a larger degree. And then we have an A, B, C for the wave B. And then a 1, 2, 3, 4, 5 impulse for wave C. Now this might not be over at this point. I went down to the lower time frames, to the 5-minute and the 1-minute, and it looks like it can be complete, but we also, this may be a wave 4 that's starting, and then one more little pop to the upside. So it may not stop right at this point, but we're right in that territory of the 40 to 50% range that I think we'll get to before heading back down. I don't see us getting to that 62%. There's just too much going on. It should, the whole wave count that we have should mean that the market's getting weaker. Wave, every degree that you go down for these wave 1, 2, 1, 2, 1, 2, it should be getting pretty weak now. Okay, and just to show you on the hourly time frame, I showed this the other day that we had the horizontal white line and this white line down here for the bullish scenario is that's a ascending triangle. We broke out of that, but I just kind of said not so fast. Okay, we do have a trend line that's parallel with this that just gives us a flag. So it's really perspective of what's going on. Yes, we broke out from this, but will it be a fake break for the bulls, or is it just flat out a bear flag and that we hit the top of the channel, close the gap, and we're going to head lower as normal if you're looking at it from a bear's point of view? So those are two of the looks, and we break above this channel, then it looks like we're pretty clear to get up to this 396 expected move, and also this gap area up here to test that. So just watch out for this. We're going to keep it nice and clean and simple. We get above, let's call it 390, And we're off to the races for probably another good 5 points on the SPY plus more. Okay. Another perspective, QQQ. And we'll go ahead and do the Elliott wave count as well. And it's virtually the same thing, but just a little bit weaker. And we're just in this 20% to 40% area here that, I just don't think we're going to get above. I just see, we got a gap that we're testing right now. And we have the wave count where it was a much more powerful move to the downside. We have a 5-wave move down for a wave 1. And then an A, B, C for the first A, B, C for the B wave, and a 1, 2, 3, 4, and possibly a little bit higher for 5 to end off this degree wave 2, and then lower from that point for our minor wave 3. Okay, let's give you a visual and traditional. And notice we're right at resistance. We're right at the gap resistance. We're right at this resistance here. We're just having a lot of trouble getting past it. And, I know I didn't mention, but all of these we have no divergences. So it's not like, it's giving us a divergent signal that we've gone too far. I just think it's a actual bear flag. So in the flag sideways, if you look at this white horizontal channel, it's just a sideways bear flag rather than any price movement to the upside. All right, it's just been sideways. And IWM. Elliott waves, just a little bit different. We do have a 1, 2, 1, 2. And then on this degree, we're looking at a 1, 2, 3, 4, 5 to complete the greater degree for 1, and then a 3-wave move for A, 3-wave move for B, and then a 5-wave impulse move for C. That ends off the A wave, B wave, 3-wave move down, and then an A, B, and impulse wave to the upside, which may be complete here on the lower time frames. This looks like a wave 4, and we just barely completed it, but we do have room if we need to hit that 50% retracement line as well. So they're all kind of doing the same thing. IWM might be the strongest, but let's go to DIA. Oh, and that was, that just the same thing. It's a bear flag. There's DIA. Elliott wave count. We don't really need to do. It's on there, but same thing. The visual. Let's give that bear flag. Bear flag right into gap resistance. So just something else to look at. We start getting to the gap. We still have resistance there. There's just a lot going on, and the market is really, really weak, and it's in a position of a lot more downside. And we actually do have some divergence here in this one. We have some bearish divergence on the IWM. So IWM may be the first one to start moving, seeing how the banks are coming up. We're getting to about 18 minutes in video. I guess we'll just end it off with the expectations for next week from the options market. We don't talk about it very often, but this is something I learned off of Theo Trade. It's a wonderful platform that these guys, they teach their traders very well. And I've been following them for a long time. Back since 2018, I believe, is when I started actually hand placing these options expected moves in. And there's a video, I'll pin it up top, but this kind of gives us our playing field for the week. And so this last week, I actually thought we would have hit one of the sides. And so I was targeting, as putting our out of the money puts and calls out on the ends of these, which it's a good strategy because most of the time we do hit one side or the other, and in some cases we hit both sides in 1 week of the options expected move. And so that's a really good thing to learn, and it's nice. It gives us our playing field for the week. It's kind of like a soccer or football field where we expect to be playing up and down inside of here. And when you see us very narrow, and you see how these are consolidating, you see how the lines are pretty much the same, then you know we're bound for a move, such as when the lines are not even close to each other, then you know we're trending. So we're not trending right now. This move up is just a move before I think we actually start trending back down. So something just to be aware of. And again, this is the options expected move, and we'll pin that on up above. Okay, so thanks for joining us here, Options Center, the weekend edition. Don't forget to like the video, and I'll probably put out some sort of bonus video out tomorrow, or if not, then I'll see you Monday. All right, have a great day.